it's a pleasure to have you once again on the link this week, coming ahead of the economic summit, which is NTV Economic Summit, which is a calendar event and where economics is discussed, but economics that yields things, where people don't just lament, but they discuss solutions looking forward. And one of our partners this year is Deposit Protection Fund. They're in the studio today. However, we're not going to talk about Economic Summit. We're talking about what they do. And in the studio, I have Mrs. Julia Olima, CEO, Deposit Protection Fund. Julia, welcome.
Thank you very much.
I have listened to radio. I have heard DPF. Every time a bank advertises, they say, we are protected by DPF. There's something they say like that. But viewers want to know, basically, what is your mandate as Deposit Protection Fund? Why should I care as a bank customer?
Okay, thank you very much, Sam, for hosting me. Yeah. The Deposit Protection Fund has the main mandate of paying depositors up to 10 million shillings in that unlikely event the Bank of Uganda closes your bank. Yeah. If the Bank of Uganda closes your bank, you'll not go away with nothing. Yeah. At least we shall, as immediately as possible, pay you up to the 10 million shillings. Now that payment that we make is very important, because at the 10 million shillings we're covering 98% of all the depositors in the country, which means 98% of you will be paid fully by the Deposit Protection Fund. That creates confidence in you, because banking thrives on confidence. Once the depositors are not confident, they'll withdraw their money, and that can lead to a crisis, that can lead to a collapse of a banking system. And so the Deposit Protection Fund's mandate of paying depositors up to the 10 million is critical for financial sector stability. It's also critical to support the economic growth of this country. Okay,
there's something you hinted on I want viewers to understand. Why 10 million? Why did you choose the threshold of 10, not 15, not 20?
Yes, so the Deposit Protection Fund is guided by core principles on deposit insurance, and there are some parameters that we are asked to look at, because coming up with those parameters was based on a lot of research and experience. So the guidelines are that when you're coming up with that limit, try to protect at least more than 80% of the depositors in your country. So we are protecting 98%. The guideline is also, when you look at the total deposits in your sector, try to cover at least 20%. And at the 10 million, we're covering around 18%, which is quite sufficient. There's also a guideline that when you're putting up your protection limit, be cognizant of the limits of the rest of the countries around you, especially if you're a trading bloc. So Uganda's limit of around 10 million, we could say it's around $3,000 US. So Kenya has 5,000. So there is no way we can come up with a limit which is much, much higher than Kenya, because then you'll destabilize the Kenyan banking sector also, because then people will prefer to come and bank in Uganda, and that's not what you want as a region. So when you're looking at the limit, you're looking at regional balance also. The guidelines are also that when you're coming up with that limit, try to have around 2 to 4 times your GDP, so that you're not forced to collect a lot of money from the banks in premium, because you want to pay a lot of money to the depositors, because then you're going to stifle the private sector. A lot of money then comes into the fund, is kept by the fund, instead of being lent out in the economy into loans and so on. So it's a balancing act. You have to be able to afford it yourself, because the DPF could say we could protect up to 100 million, but when a bank closes, we don't have the money. What confidence would we have created in the public? So coming up with the 10 million is a balancing act. However, the principles also say after every 5 years you review that. This 10 million was put in place in 2019, so next year we're going to do a review to see if we can afford an increase without destabilizing anything within the East African economy.
That makes sense.
Yes.
And my takeaway from that first question is that a majority of Ugandan depositors 10 million and below, so you are covered. You have covered them up to, you said,
we've covered most of 98, them.
98%.
98%.
Okay.
Yes.
If a financial institution were to close, I understand you guarantee 10 million, as you have said. But where do you get the money to pay?
Yes. So Sam, I want to assure Ugandans that the Deposit Protection Fund has the money to pay. No one should think that the Deposit Protection Fund says they'll pay. When the time comes, they'll not pay. Because we have computed the 10 million carefully. Like I've said, you have to look at your ability to pay. So at the 10 million, we are confident we can be able to pay. Now, who gives us that money? That money is paid to us by the banks who are members of the Deposit Protection Fund, and the members of the Deposit Protection Fund are automatically admitted to the fund once they are regulated and licensed by the Bank of Uganda. So we'll have commercial banks, we'll have the credit institutions and the microfinance deposit taking institutions. Currently there are 33 of those. So every year they pay to us an annual premium, and that annual premium is computed as a small percentage of the deposits they are holding. So over the last more than 20 years, that fund has kept growing. And as I speak now, the fund is sufficient to be able to pay any depositor in that unlikely event that the Bank of Uganda close their bank and the Deposit Protection Fund is asked to pay. Yes.
You must be, do you make money when you hold the premiums? You keep, insurance companies do invest elsewhere. You invest the money also? Yes,
we are allowed to invest that money, and we are also restricted into investing in treasury bills and bonds, which are liquid, because you realize a bank could collapse anytime. So we need to really have that money, and our promise to Ugandans is that we would pay. So there is no way we can put that money in real estate and start explaining to Ugandans that we have to sell the property to get the money. And so therefore we have a strategy of investing in treasury bills and bonds, and we ladder those over a period of time so that if anything happened, we're ready to be able to compensate the depositors.
I have seen in your statements, and sometimes you show income, which is okay. Talk for another day. Many Ugandans go to tier 4. Tier 4 means not regulated by Bank of Uganda, SACCOs. Now, if I'm in SACCO, am I not covered? Are you guys interested in me also?
Yes. Now, SACCOs, the government of Uganda is interested in SACCOs, and that is how the Uganda Microfinance Regulatory Authority has been regulating the SACCOs. So the SACCOs are not isolated. However, because they are not yet under the ambit of the Bank of Uganda, we don't cover them as a deposit protection fund. So the advice we're giving to SACCO members is ensure that when the monies are received, or when the SACCO members contribute those monies, please try and take that money to an institution that's regulated. Don't keep it in the house of the chairperson of the SACCO, because tomorrow it can be stolen or it can be used for other purposes. So try and keep that money in an institution that is formal and that is regulated. So SACCO members should continue operating their SACCOs, but also we encourage them to get those SACCOs formally registered so that they have better risk management systems, because it's not possible for everybody to go to a bank, and that is why an economy develops and has different means through which people can save, and SACCOs is important, and SACCOs being regulated also.
So if they got their money and took it to a bank which is regulated, there's some degree of cover anyway already.
Yes, there's some degree of cover. So if anything happened, at least you'd be paid up to the 10 million. And remember, after the 10 million, you'd still be paid depending on the proceeds from liquidation. When the bank is liquidated, not everything is lost.
Our final question. Of late, we have had banks asking depositors to give their NINs, national identification numbers, and alternative modes of payment. DPF is interested in that issue. Why? Why are they asking us to give them our NINs now?
So DPF is very interested in that, because for us to create confidence amongst the depositors, we have to pay you fast as possible, and we have to pay the right person, we have to pay the right amount. The only way we can know that sum is sum is using his national ID. That is his unique identifier. And the only way we can pay you fast is if you've given us your mobile money account or an alternative bank account. So
not of the bank which is closed.
Not of the bank which is closed,
I get it.
but an alternative bank account. So that in that unlikely event, your bank is closed, you will not have to walk around looking for your money. As long as you've given us your NIN, you've given us that alternative mode of payment, we shall simply send you your money, and you'll remain confident in the financial sector, knowing that, okay, this bank was closed, but I could put in another bank and still get my money in case anything happens. So it's very important for the depositors to ensure that their information with their banks is updated, especially with the NINs, alternative modes of payments. And now we're also encouraging companies to give in their registration numbers so that we can identify them and be able to pay in time.
I just forgot one question.
Yes.
DPF is a regulator. It's an insurance for banks.
Yes.
So sort of works for the regulator, Bank of Uganda. Now, do you have any reason to interface with me, or you deal with only banks and I wait for crisis and then you come in? Is there anything that would bring me to you people?
Yes, and that's a very good question. Because we've tried to explain to the public that the DPF actually comes in when your bank is closed, and you'll hear me talking about in that unlikely event your bank is closed. So before that, the only way we interface with you is to encourage you to give your bank information so that when your bank is closed, we're able to pay you. Now, when the depositors have issues with their banks and maybe they have customer complaints and the banks have not settled those, the Bank of Uganda has a window that can be able to address those customer complaints. But for us, we come in when the bank is closed. But we try to encourage the depositors to be aware of deposit protection. We encourage even those who are not banked to try and bank with institutions that are protected by the DPF, because they get that protection. And not only that, the more Ugandans put money in formal institutions, the more money we have to be able to lend out into loans, and that is how we can have the ripple effects and have our economy become more vibrant than it is now.
I thought I would come to you, but you have told me no, bank, crisis only, and I come. Thank you so much, Mrs. Julia Olima, CEO Deposit Protection Fund. Viewers, you heard DPF. Every time a bank is advertising on radio or TV, they always say we also are covered by DPF. This is what they do to ensure that in case there's a problem, you get your money paid, at least 10 million shillings. We hope we added value to you in terms of information today. That was the link. Thank you for joining us tonight.